Good morning, traders. Welcome to your 7-minute market update utilizing technical analysis to predict direction based on human emotion. Today is September 1st, 2012. Lots to talk about, so let's get started. First of all, I'd like to say I apologize for not making a video this whole week. But just to let you guys know, it's because nothing has really changed from what I've discussed in the previous videos. I mean, everything is pretty much going the way it's supposed to, and everything is pretty much predicted as we thought. If you've seen my previous videos, you would have seen exactly what probably would have been a good guess of what would have happened on Friday. But anyways, this will be the weekly video of this week, and I promise you, I will try my hardest to, make a little bit more videos next week. But in any case, let's get started. This is a chart of the SPY, which is the ETF that tracks the S&P 500. And on this chart, let me just zoom in here. You'll notice that we've talked about this double top, and we have a retest here on the double top, and then now it looks like that we could potentially be retesting again. One thing that I wanted to show you guys is we did get somewhat of a spinning top candle on higher volume, and you guys all know how strict I am with volume and with reversal patterns on for candle charting. The thing about this pattern, and it is above, I believe, the or right on the 20 moving average there. They basically, the feds and the government or whoever basically saved it by saying, if the markets do, come down, then, we'll release QE3. But until that happens, we won't do it yet. But just rest assured that if the markets do come down, then we'll definitely, Uncle Ben was like, we'll definitely do QE3, and that everybody knows will devalue the dollar, and dollar down, market up, and dollar up, market down, and that's how it's been, and that's how it will be. But let's take a quick look at the weekly chart. Okay, we've already talked about patterns that rhyme, and this is one of them. On the weekly chart, I did mention that the weekly chart will be in a double top, and we'll have to see if we get a pullback on the double top. Now, yes, it does look like a much more of a bearish setup where, let me just kind of zoom in here. It's not an engulfing pattern, not even close. I mean, this body needs to engulf that body there, so that pattern's dead in the water. This isn't a piercing pattern or any other opposite of the piercing pattern or anything like that. This is just basically a spinning top. Some people call it doji candle. Depends on how lenient you want to be on the pattern. On almost no volume at all, not justifying any type of reversal. But we did get another down week. But here's the thing. This week was not a close below the low of last week, which means that this could potentially turn out to be a consolidation pattern, where you have this up move here, we consolidate before another up move higher. Now, anytime you have a consolidation pattern right under a level, which is right here, then that means that we have a potential of building energy to break right through that. Okay, so you guys understand that this doesn't necessarily mean just because we had a down week this week that we're gonna pull back, or we could actually just pull back into the 20 moving average and then get a bounce even higher, breaking out of this double top pattern here. Okay, so just keep that in mind, that that's something that you want to be aware of. Again, the videos I make is more of, I'm not going to tell you what's going to happen. I'm going to tell you what I see in the charts, and you can make a decision on yourself of what's going to happen. Okay, I think that makes a little bit more sense, because a lot of people have their bullish sentiment and their bearish sentiment. Of course, I'm going to tell you what I'm going to do, but for the most part, it's really up to you on deciding on what's going to happen. Okay, so but that's pretty much what I see as far as the pattern goes. Now let's switch back to the daily chart and take a look at those mathematical calculations. Alright, this is the daily chart, and I assume that you come to my video because of these mathematical calculations, simply because nobody else has it out there, and for the most part, there's other technical analysts out there that do a pretty good job. So these mathematical calculations are pretty much something that I release to the general public just so all of you can see. Alright, so this take it back. Let's see, 1 2 3 4 5, here we go. So this is the start of the week, which was Monday. Alright, so on this day here, we hit this 141.88 level. We come back down. You know, obviously this is a lot of game playing over here. I mean, we can just pretty much see that we hit it again, the 141.88 level. Okay, so actually, okay, so on Monday we hit the 141. We open at the 141.88. We pierce it. We come all the way down into this 141.36, and then we get a small little um, recovery there. Okay, so now the next day we go right back into this 141.88 level. Okay, and then the day after that we go right back into the 141.88 level again. So this level here is being tested over and over again. I mean, even back here it was being tested. Even on this day here, tested again, tested again, tested again, tested again, and on Friday it was tested one more time. And each time this 141.88 level here was tested, it could not close above. You see that? No close above this 141.88 level. And this is pretty interesting for me because this purple level here was something that I was actually going to scratch off my list of mathematical calculations, because if you've been following my videos, I've been mentioning that this was a test level, meaning it was a level that I was testing, and these pink lines were more of the valid levels that we've been seeing that has been working a lot better. But this 141.88 level has been held up, and it was drawn in, meaning it was calculated on this day here, which is this doji candle here. And normally I do calculations when I have these kind of reversal patterns here, and then I'm able to have enough data to make the calculation. And you know, from this day on, actually these two levels up here was created the day before. But anyways, just to let you guys know that this 141.88 level seems to be pretty significant, meaning if we can break through and close above the 141.88 level, then this market could go bullish one more time. Okay, now looking at the daily chart, we did create this somewhat of a spinning top type of candle. Okay, and I'm gonna jump into this volume analysis real quick before I move into the 10-minute chart to show you how this 141.88 level has held up. So I mean, it really depends on how you look at your chart. I mean, if you smash it like that, it looks like a doji candle, but it really isn't, because doji is, you know, in Japanese it stands for meet in one place, and which is why you have price opening and closing at the same point. It's rare that you'll actually see a true doji, but when you see it close like these, you know, that's pretty much a doji. So, but this is more of a spinning top, but a spinning top can be used as a single candle pattern reversal. This happened on high volume. It actually happened on pretty good volume here. As you can see, it was pretty matched up with this volume here. Nothing like this volume here, but it doesn't matter. I mean, I'm considering how low our volume has been this past month. This volume is pretty significant. So we have this reversal candle on higher volume on the daily. Okay, so this could mean we have a potential of retesting this 141.88 level again, and possibly breaking out and closing above it. And why do I say that? Is because Mondays and Fridays are normally low volume days. This past Friday was obviously an exception because we had all those the news coming out and Uncle Ben coming out to talk and stuff like that. But on a normal cases, Mondays and Fridays are normally low volume. Days before and days after holidays are normally low volume. And this coming Monday is not only a Monday, which normally is going to be low volume, but in addition to that, it's the next work day after a holiday. Oh, I'm sorry, not Monday, Tuesday, right? So Tuesday is the day right after the holiday, and Monday happens to be the holiday, so that's, you know, that's a double whammy type of low volume day. But we'll see. I mean, if there's big news that comes out, then that'll obviously change. But if it doesn't, if there's no news, then it's going to be a low volume day, which can give the government or the banks or institutions the opportunity to prop the markets higher and to obviously close it above this 141.88 level here. Okay, so that's pretty much what I'm seeing now. There is a possible reversal simply because there's a lot of volume. It's a nice volume. I would rather have seen the volume on this day here, because this is actually would be considered a pivot point, right? This volume here actually happened the day after the actual pivot was put in, which means this may not actually be legitimate. Okay, like for example, this candle here, you see how it's a doji candle, right? It's right into this support line here, which is this upper trend line. Let me just kind of zoom out here. All right, let me just make this a little bit better to see. Move it up there. Alright, so you see how this doji candle is created on really good volume here on pretty good support. We were right into the 20 moving average, and this this upper trend line here, we got that bounce. That was pretty obvious. We talked about that in the previous videos, so we knew about that. We knew that was something to be aware of, right? We have not the same thing to on Friday. This happens the day after the pivot point was actually put in, and that's considering this is a pivot point. Now, a pivot point is created after 3 consecutive down days minimum. You know how I am that we need at least three days for higher volume and 3 days of a down move before I can consider it a pivot point, right? And the more days you have, the better the pivot, or the stronger the pivot is. Now, from here to here is a pivot, right? So we kind of go up. We closed right here though. Okay, so this candle, although went higher, we closed right here. Okay, so it's a pretty much a flat day on Monday, and then we had a 1 2 3 down days. Okay, but was it really a down day? No, because we came over here. This was actually an up day. Okay, and then we came down again, and then now we're up again on higher volume. So to me, this does not justify what I call a picture perfect pattern, or picture perfect entry, or picture perfect level. This here would be pretty much picture perfect. Okay, you had a high here. This is 1. This is another low day 2. This is another low day 3, and this is minimum 3, right? And then this is 4. We had a doji on high volume into support. This justified an up move here. Okay, this here does not justify an up move, but it could happen. Just saying, it's not a picture perfect pattern, but it could definitely happen. Okay, so just think about it this way. We could potentially have in the beginning of the week, a float higher, a continuation of a float higher, and then possibly a sell-off. Now, because we're so high up here, right, the higher you go, the more overbought we get. We have a potential, okay, just a potential of getting all the way up here. So just keep that in mind, that this market has not told me anything other than that it's still making higher lows and it's still making higher highs, which means that the trend is up. But in the long term, or mid to long term I should say, it still has not broken out of this double top here, which is what we discussed in the video called Patterns That Rhyme. And so we just have to you know keep in mind that on the weekly chart we are into a double top. We could be pulling back, but because this week we didn't close lower than the previous low of last week, then that just means that we could be just consolidating for another push higher, but that remains to be seen. I think this coming week will tell us a lot more of what this market's going to do. But right now, this is just a float high, and as you can see, this triangle is getting skinnier and skinnier, and when when it has no more room to go, it's either going to break down or break up. And you know what, I'm going to tell you right now, I don't think it's going to break up. It's going to break down, and that's just technical analysis. I've never seen well, I shouldn't say I've never seen. 90% of the time when you have a wedge pattern up like this, you're going to break down when you run out of room. I mean, that's just the bottom line. Okay, now just keep in mind, right, let me just delete all of this here. Just keep in mind, we have this top put in here, and it might not even be a top, but we do have a pivot point here. That's obvious. We did have a down move here, right? And now it's just a sloppy. Now this is another possibility. Okay, I just want to make clear to you that what our possibilities are. This could be a bear flag pattern forming here. Let me just zoom in here, and you can see a little bit better. That is a sloppy, but definitely on a technical level, a bear flag. So keep that in mind, that even though it does look a little bullish because of the volume here, and it's resting right on the trend line, right, this is still a bear flag. Again, this is why I say that next week will tell us a lot more as far as what the markets are going to do. We are literally, I have not moved this line here. Okay, this line has stayed here since weeks ago, and it's just bounced right off this line into high volume, but it was unable to close above this 141.88. So I think if it does close above this 141.88, then that's something that we need to be aware of if you're a bear. Okay, now let's switch to the 10-minute chart. Alright, this is the 10-minute chart of the SPY starting from Monday. We go right into this 141.88 level. I just wanted to be a little bit more detailed. We actually opened at 141. 141.89. Okay, so it's 1 penny up before pulling back. So this was a very nice intraday trade. The low of this candle down here was 141.37, which was also 1 penny off from this level here. So we were 1 penny off from this level up here and 1 penny off from this level down here. Now these levels, again, if you're new to these videos, they're just mathematical calculations that I make, and these mathematical calculations are preset, meaning I get the data from what the market does. I input it into my calculation and it spits out these numbers. I put these numbers on the chart, and I expect somewhat of some sort of pullback or a gap. What do I mean by that? What I mean is these levels are going to tell me it's going to gap either above, below, or it's going to have a bounce either off of these levels. And the third thing is I don't know if it's going to be an intraday bounce or a daily bounce. Okay, so just keep that in mind. But these levels so far since last year December is when I discovered it, has been holding up very, very well as of late. Okay, so now we come back up, we actually break through. And again, if you're new to these videos, I always say the first tag of any level is the one that we want to be aware of. Any other tags of it is used and abused levels, I consider, and I don't trust them anymore. So I would not have. Just to let you know, this whole week here I've been busy. As you guys know, I haven't been making any videos, which means I haven't been really doing any trading as well. So any of these day trades I have not done. I just want to let you guys know that. Again, I'm not in it for your money, okay? So I'm obviously going to be honest with you. I'm not going to make like, looking pushing back in history and say, oh yeah, I took this trade and made all this money. No, I'm not like that. I'm going to tell you right now, I made 0 trades this week. I'm still holding short on the general market itself, and the reason is the volume is just not there. And you guys know how important volume is to me, and that's what I stick by, and that's why I haven't lost money, but I haven't made money. But anyways, so this part is just to show you how these levels work in case you're new to these videos. If you guys are old timers on my videos, and you guys already know what I'm going to talk about, so you can pretty much skip this part. Alright, so we come back up, and then we break through and we come down. We get some support here at this 141.88. The low of this candle here was actually at 141.88. If you look right here, the L, the H, the O is the open, alright, the C is the close. This candle here, the low is 141.88. We consolidate, we build energy to break down. Alright, we come back up, just trade right around this 141.88 level. Then we actually, if you look at the bigger picture, this is actually a consolidation pattern, right? We come down and then we break up again, and then we come close to this 141.88 level, which is 141.87, which is another 1 penny off. Okay, pretty amazing stuff, huh? Then the next 10 minutes we get into the high of 141.88. so this candle here was to the penny. We come all the way down, we tag this level here, which is 141.36. we get a bounce, right, a significant nice bounce, and then we break down, and then we bounce again, and then we finally break down from this 141.36. Now if you notice, we did not confirm, meaning we did not close below this candle here. So we come back up, all the way up again, and this to me is considered a tag, but it didn't come close to it. The high is 141.84. that was 4 cents off. We come all the way back down into again the 141.36. I mean, these levels have just been holding up, right? Same story again. We repeat the same process again. The high was 141.89, 1 cent off to 141.88, and the next candle here is 141.89 again was the high. We come down all the way down, and then we don't even come close to 141.36, but this is expected. It's a 10-minute chart. This here is the next day. You see these dotted lines. If you guys can't see these dotted lines because you guys are looking at these videos because of your iPhone or your Android phones or whatever, these green lines here are the mark of the day. Okay, we come back down, so the new day we gap down, we come all the way down, we can kind of just start trading here, and this is actually a bearish consolidation pattern, but this is only the 10-minute chart. So towards the end of the day it did play out, but we can't expect it to continue to play out because it's a 10-minute chart. And the next day, sure enough, we gap up. Okay, and then this was on Friday. We come all the way back down, and what do? We retest this 141.88. The high of this candle was 141.82. Okay, so that was actually kind of off, so I wouldn't really say that this was a tag, but it came pretty close, which is pretty interesting to see. But you can see now that 141.88 is not as significant as it used to be. The more it gets hit, the less I can trust it, right? We come all the way down, we break down from this 141.36, and again, the 141.36 is obviously not holding up as well as it used to be. But this 141.36 is back in the day, like days ago, I would say weeks ago, this thing was holding up. So this level is already being used and abused anyway. Okay, we come into this 141.36 level. We break through it, but we did not confirm. You see this candle here? We didn't close above this candle here, which is a null confirmation, right? We break down, we consolidate bearishly. Okay, this is a bearish consolidation pattern to prepare for another down move for Tuesday. However, again, this is a 10-minute chart, and Tuesday is going to be low volume, so this pattern may fail. In addition to that, we are resting right above these two moving averages here. Okay, so that's the 10-minute chart intraday. That's pretty much what happened this past week, and that's pretty much how well these levels has been holding up, which is pretty good. Pretty happy about that. So now, before I move into anything more, let's just take a look at the dollar. Now, if you fast forwarded this video, now you can kind of just slow it down here. This is the actual dollar here. This is the dollar chart that we've been following for weeks now, and I had this level here, which was at $80.61. And I told you that the dollar was very bearish, right? We had these down, consolidation patterns, down, consolidation, and another down, right? And I've been telling you the dollar has been very bearish, yet I've been bearish on the stock market, right? I mean, or on the SPY, which is kind of weird how I would go against what the charts are seeing. And that's just, again, trade what you see and not what you think. And right now, I traded what I saw at the time I put the short in. And again, when I talk about stops, I talk about stops in a way of when you're stopped out, you stop out. And that's it. The bottom line is you stop out, you stop out. Once you set your stop, you stop out when that price has been hit. You take a small loss, right? And then you re-enter. Okay, now the reason why I haven't made any trades this week is because the volume has just been so low, it tells me nothing. And in addition to that, I have not hit my stop yet. So to me, it's still valid. Okay, even though we still look bearish. But check this out, this $80.61 level is right here, is lingering right around here. We also have this green line here. What is that green line? Okay, so we had a pivot point right here, so that gives a little bit more support here. And we also have the 200 moving average here that the dollar still has not hit. So the dollar could still potentially come down to this $80.61 level before getting a substantial bounce. Let's see if we can get any fib levels here. Let's grab this pivot point here. So it looks pretty significant. Yep, look at that. I didn't even, it's just out of the blue right there. We're right in a 382 Fibonacci retracement. So to cut this video a little bit shorter, simply because my video has been so long, we have a potential of getting into this $80.61 level. What does that mean? That simply means that the market still has a potential of going a little higher, like we discussed, because we had that possible reversal with the high volume on the daily chart of the SPY. That's telling us that's a bullish move. This has not hit this $80.61 level yet, which also tells me that this could potentially be a bearish move, which means the market still has a potential of going higher. But once we hit this $80.61 level, or if we pierce this $80.61 level, to me that's going to be, and we confirm, remember that, the confirmation, because we have so much support around here. If we can break through down or break down from all these levels here, the Fib 382, this pivot point, this calculated level here, and this 200 moving average, then the market's going to be in a whole lot of trouble bullishly. Okay, and the dollar is just going to be in a whole lot of trouble because the Feds are probably, obviously printing more money, devaluing the dollar. That's what Uncle Ben likes to do, blah, blah, blah. But that's if we get to this $80.61 level. Again, these levels, like this one here, didn't get hit. The 85.23 level didn't even get there. But again, these levels, they work that way. If they don't get tagged, I don't make the trade. If they get tagged, I make the trade. But again, I can't make a trade based only on these levels. I need other supporting factors like this 200 moving average, the pivot point here, and the Fibonacci 382 level gives me a justification that this is good support. If we can get there, if we can't get there, then I don't do anything. Okay, so that's pretty much my analysis for next week, is that we are bullish, right? Unless big news comes out, we are bullish. It does look like it's a lot more bullish than it is bearish, at least for the beginning of the week. Again, once we hit our resistance levels on the SPY and the support levels on the dollar, then we should be heading down. And the reason why I say that is because the move has just been so high, so long, it's unsustainable. Okay, this move here is unsustainable. I know a lot of guys out there that are saying, the market is bullish, blah blah blah. You should buy the dips, buy the dips, buy the dips. And yes, if you look at these patterns here, you bought the dip, you would have made money. You bought the dip, same, 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 until we reached this weird looking pattern here, which was just a float up, right? We talked about this low volume float up. We come down, right? So let's just say you bought the dip here, right? You buy the dip here. Did you make money? No, well, no, you really didn't actually, because you would have bought the dip here. Most traders wait for the next day to buy long or to buy short, and now they're right now sitting pretty in no money. Yes, they could make their money back again next week, but see, that's why I stay out of these types of trades. I don't like to do that. If I don't catch the bottom, then to me it's chasing. Let's talk about this 143.29 level here, which this candle almost got to, which was the high of 143.09. That's 20 cents off. Again, I don't really like this purple line, but I would say that this 142.78 level was a valid level there before we got a pullback. Okay, so just remember that the bearish part says that this is a bear flag. Okay, and the bull part. Oh, and we are into this 141.88 level that seems like it can't get through. But the bullish part is we have this reversal candle on high volume. It wasn't on the pivot point. To me, that's important. So I wouldn't go long the market. My opinion, I wouldn't do that because this pattern isn't picture perfect for me. Okay, this pattern has potential of failing. Okay, doesn't mean it will. It just has a potential of doing so. Okay, and you know. We do have this upper trend line here that can go a lot longer, which means market could go higher. Now, in addition to the bearishness that I was talking about earlier, we are in this rising wedge here, which potentially means that it's unsustainable. It can't continue like this. The next bearish move is we are in a double top on the weekly, and the pullback could happen, but on the flip side, on the bullish side, it could just be consolidation on the weekly before moving higher. Okay, so right now I'm gonna have to be neutral. All right, I'm gonna tell you right now, there's too many bullish and too many bearish, kind of fighting each other right now. Right now they're in a battle, and next week will tell us a good idea, or give us a good idea of what's gonna happen and continue to happen for at least the rest of September. Okay, in my opinion. All right, so I'm already into 27 minutes. If you have any questions, feel free to ask. Whether you're bullish or bearish, I'm still right now I'm neutral, but just to let you know, I'm still short the market, and that's because I haven't hit my stop yet. And there's a potential of us breaking down. I've been saying that for how long, so it may not even happen, but because there's that potential and I haven't hit my stop yet, I'm gonna hold on to my short. Now, until the volume starts picking up in the market, until we get substantial volume again, I'm gonna stay out of the markets, because a lot of times levels that are hit in low volume situations are either pierced or they don't hold, because we just don't have enough traders out there giving that general price validation. Again, I'm just gonna spend 30 more seconds. If you buy a watch at eBay, I'm gonna use a watch that you like, and there's only two people on eBay selling this watch, and they're selling it for, say, $100, and the other guy's selling it for $110. You don't know if this watch is even worth $100, but you like it, right? So you buy it, right? And you buy it at this $100 price. But then, 2 weeks from now, you check eBay again, and you sell 200 people selling the same exact watch for $50. Oh, you just got ripped off, right? Because the volume wasn't there. Only had two guys selling, and so they could pretty much get you to buy it for whatever they wanted to, right? But if you had 200 people selling the same watch, you can pretty much validate that the price is not worth $100, and the price is actually worth $50, because the volume was there. You had enough people selling it at that specific price. That validates that $50 price. That validates that watch is worth $50 and not $100, right? So that's where volume comes into play, which means without the volume in the market, to me, in my opinion, it doesn't validate this price. So this whole month of August does not validate this up move. That's why we had this sporadic pivot point, and then we had this float higher. Okay, it doesn't validate this move, meaning this price to me is not true. It's not real. I don't know if that even makes sense, but to me, I can't trust that the market right now, the SPY, or the general consensus of what the most traders think is going to be 142.78 is the price that is what the SPY is worth. No, I don't know. The volume is just not there to confirm it. Therefore, I stay out of the market and I will buy my stops. And if I get stopped out, I get stopped out and I re-enter when the volume starts coming back in. Okay, and I do believe that the volume should start coming back in this month. All right. Well, this is your 30-minute market update. Thank you very much for stopping by and watching my videos. I very much appreciate it. God bless you all. Good luck in your trading, and I hope to see